All right, what's going on, everybody? Let me know if y'all can hear me. Had some technical difficulties getting started, but we're right on time to get this analysis going. How's everyone doing today, and where are y'all from? Where is everybody from? Are you guys also signed up for the Advantage membership? Are you part of our free Discord? Let me know so I know where exactly people are from in our community, in our live stream right now. What's up, Daniel? What's up, Poker Throat? WVRD. What's going on, everybody? Lots to talk about today. I mean, Bitcoin kind of making its nice move back up to 10,500 and then slowly, getting rejected at the bottom of this wedge. So tons of information that I want to talk about. Let me know what questions you guys have, what coins you are trading, what you're looking at for the next, couple days, couple weeks ahead. Okay, but I'm going to tell you my thoughts. Okay, because that's what you're here for, right? So let's start off with the 15-minute time frame. Okay, I think the 15-minute time frame is always a good time frame to look at because it gives you, the granular picture of exactly how the market is looking in the current day. Because when we turn on pivots, right, as y'all very well know, when you turn on pivots on the 15-minute time frame, this basically gives you a pivot for the current day that you're on. Okay, a simple strategy that I've laid out in my in one of my YouTube videos previously is if you actually turn on the pivots along with this VWAP session right here. So again, VWAP is the volume weighted average price. Just get this, put the anchor period to session, and this will help you see where price is in relation to the volume weighted average price, meaning is the price above the key average of the overall, session that's going on? And on top of that, where is the price in relation to the pivot, which is, again, the daily pivot, right? It's like a daily support and resistance level, if you will. Okay, so at present moment, what we can see is price is actually being squeezed between two things. We're right below the pivot, which is the daily pivot, and we're slightly above the VWAP session. Now, if we start seeing price break below the pivot hard, break below the VWAP session hard, I've stated before that this is usually a scalp bearish opportunity. Now, how would you play this? Well, I think a simple way to play this is as soon as you start seeing a 15-minute candle start closing below this VWAP, you have two confluences of confirmation. One is you're below the pivot, which is the daily pivot, and you're below the VWAP session, right? So that means you could short, take your trade down to the S1 or maybe even this key support right here, which is 10,382. Stop up here, and you've got a pretty solid trade going on for your scalp position. Now, that's one way. Now, again, how do you get those pivots? That's one of the questions in the chat. So you can just type in pivot right here and click pivot points standard. Okay, click pivot point standard. And then once you get the pivot point standard, you can just click on the settings and the inputs right here under type, just leave it traditional, and then pivot time frame, you can leave it auto. Auto basically means that if you're on 15-minute time frame, it'll pull up the daily pivot. If you're on the 1 hour or the 4 hour, or even the daily, technically 1 hour and 4 hour gives you the weekly pivot. The daily gives you a monthly pivot. Okay, so these pivots are particularly important because if you're not used to, say, support and resistance levels like I am, like this is how I draw my charts, right? I like to map out levels based on key SR levels. Where is price finding resistance? Where is price finding support? Where is a key area where price is finding support or resistance due to Fibonacci confluence? There's many reasons why I draw out these markers. But let's just say you're not interested in that and you don't know how to do that. Well, you could just simply turn off all the drawing tools, right? And then you can just lay these pivots out on the chart. And these pivots help you basically create its own automated support and resistance level of looking at the market or whatever asset that you're looking at, really. So at present moment, like I stated before, I think the best way to probably scalp this area is once price starts making it below the pivot, as you can see, and below this VWAP session, which is this white line. This is a scalp trade. You can place your stop above here, and you could take your target profit way the heck down here around the S1, which is 10,380. Okay. Again, I can't give you financial advice, but this is how I trade. If I'm looking at scalp positions, I'd be looking at the daily pivot, the VWAP session, and especially if the market is kind of ranging like this. But this is what I call a ranging market, because as you can see over the last 24 to 48 hours, it really hasn't done squat. It's really just chopped around this range right here. Usually, I don't like trading the range because it's pretty tough for the most part, especially in Bitcoin because it's very choppy. It also does these kinds of fake breakouts to the upside or to the downside, and it traps a lot of people. Right? You would figure that, okay, well, in this triangle that you're seeing, let me show you guys again real quick. In this triangle that I had drawn out, right? You can see there's a nice touch right there, touch at the bottom, touch at the top. We're creating basically a nice triangle. And you'd think that, all right, well, it looks like we broke out the triangle right there. But then you can see that's a fake out, boom, 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 and price rolls back over down, right? Bitcoin is notorious for traps like that. Okay, so you got to be very careful with that. Let's zoom out to the higher time frames, right? Because 15-minute time frames are usually just very noisy. Lots of really bad mixed signals that you get from price action. But when you start getting above the 1 hour, at least the 4 hour and the daily time frame, this is where the signal to noise ratio is a little bit better, right? So if we're looking at the 1 hour, I drew out this rising wedge to my Advantage members yesterday, and I stated that this wedge right here, if it starts breaking down, we should start looking towards these lows again, which is 10,250, $10,300. And you could see not only do we break out the wedge, but this is actually kind of a perfect retest right here that you're seeing at the bottom line of this wedge. So even from a 1 hour perspective, I personally think this is a good area to short. And we should be looking for the first target right around 10,250 or so. But the bigger targets, I think, come back to this key support level that helped propel us way the heck up here, right back into supply. And I'll talk about all those little pieces. But the point is, I think this wedge breaking down, this descending trend line, as long as we're inside this trend line that you see right here, and as long as we're breaking down from the wedge, I personally see price at least getting towards $9,800 to $10,000. Okay, and that, by the way, that's at least. Of course, that depends on how traditional markets look, and I'll cover that in a little bit. But I think Bitcoin structure is already showing you that, first of all, there's numerous things that are at play. Number one, key high, lower high, another lower high. Not only do we put in a lower high, but this range that we are trading in, guys, this whole big range that we're trading in, okay, we violently broke down from it, okay? Usually when you have an impulsive breakdown right through a key range, this is typically to the downside. This is very bearish, right? Price actually came back, retested the previous range low basically right there, as you can see, as resistance, and then it started to roll over again. This is the perfect bearish retest, and I cannot tell you how good of a risk to reward trade this is, because it's such a perfect retest, right? So here's the thing. I was warning my community way back over here and even over here that if we break out from here, chances are we're probably going to 11,000, possibly as high as 11,300, which was the EQ of this red box. This red box is what we call an order block. Okay, order blocks is just a fancy word of when price makes its way down, it chops around in a specific area, in a specific range, as you can see, for a little while. It could be a day, 2 days, a week, or a month. Okay, now Bitcoin is, again, because it's a smaller asset, it's a volatile asset, it doesn't do these chop suey trades or chop suey movements for too long. It just drops, bases out for maybe half a day or a day, and then just boom, drops again. Why is this area important on the way back up? Well, remember that there's probably a bunch of traders who got trapped buying into this area, buying, in this area, thinking that price is going to reverse out of here. Okay. So what price does is it comes back way the heck down here, right? It traps everybody to short even down here, and then it starts moving back up and up towards the next area, which was a previous area where a lot of volume or a lot of trades were transacted. And again, that comes back to this order block. So we then come back into the order block and we see that, wait a second, there's a lot of people waiting to sell in this area. And this is why you get this kind of strong rejection out of that. Okay, so this is why order blocks in this particular instance can be seen as key areas of resistance on the way back up, because they're basically an area where supply or sellers are waiting to sell. And that's exactly what happened. And we got sent all the way down to about 10,250. All this is actually verifiable in our community of how we mapped out this entire process over the last, I think pretty much the last month, because I made a video. Let me see over here. I made a video. It's called Private Analysis, September 4th. I did it for my Advantage community, September 4th. And we basically mapped out most of this movement on the way down, coming back up towards this area and looking to short on the way back up, and then looking for a breakdown. And that was based on a couple of things, a couple of different factors. Number one, we're working with a gentleman who's providing us a proprietary indicator. There's 3 different indicators to it, or 3 different segments to it. One is called the trend maker, which, as you can see, is on the screen right now. It's a moving average based indicator. And the second one is this indicator. We call it the swing indicator. It helps you identify, potential swing opportunities, potential large time frame supports, and it kind of gives you these sell signals or buy signals, oftentimes with these arrows. And it's a really cool indicator. It's actually a Ichimoku cloud-based indicator. So anyway, point is, we were kind of getting to the point where one of our indicators, which was the trend maker right here, was showing us that these red ribbons, okay, these are the key moving averages that Bitcoin broke on the way down. And it found support, on a very strong moving average. And then it came back into, again, those same moving average ribbons as resistance, and then it sold off. So this was a key area that we could be noting as resistance, and that's exactly what happened. On top of that, I've been mapping out my own game plan as per my own analysis, right? Which was the 50 moving average, which is the red right here, and the 128 moving average, which is the purple. I've given 3 previous examples from 2019 and 2020. First one being right here, right? Price actually breaks through the 50 moving averages. You can see, finds support on the 128, finds resistance back at the 50, and then rolls back over. Okay, that's one example in August 2019. Second example is right here in February and early March, broke through the 50 moving average, finds support on the 128, finds resistance again at the 50 right there, and then rolls back over. And so we're coming exactly to the same point again, around the same area, which is Bitcoin breaks through the 50 moving average, as you can see right there, finds support on the purple, which is the 128, rejects the 50, and now it's starting to roll back over again. Now, I cannot definitively say that the past experiences of these moving averages will definitely define the future of us either breaking out or well, technically the odds are technically we should start breaking down from here. But again, it's not a 100% probability, right? Technically, nothing is in markets. There's no such thing as 100% probability. So I think the probabilities, however, are in your favor that this rejection right here, right around the 50 moving average, let me make this a different color so y'all can see. Does not want to change colors. So this rejection around the 50 moving average is, in my opinion, a shorting opportunity if you want to go swing short. And I think at the very least, we're going to start crashing into these levels below. I have the 9450, which is the June monthly open, as one of my levels, a 200 moving average, which is the 9100 level, and the $8,800 level, which is the yearly VWAP. So we've talked about Bitcoin and we've talked about the strategy and beat it to death multiple times, right? But what does that mean for altcoins? Okay. So I've spoken about how altcoins, in my opinion, are a much higher beta, higher relative risk asset compared to even Bitcoin. So beta is nothing but a measurement of risk compared to, either the index or the beta is the best way you can define which asset has the lowest versus a higher risk. Okay, so in this particular instance, right, within the larger scope of asset classes, okay, if you're looking at equities or gold or commodities, oil, bonds, etc., Bitcoin is the highest beta asset, meaning it's much higher risk than gold, much higher risk than equities, much higher risk than commodities or equities, right? So within crypto, Bitcoin is the least relative risk or least beta, lowest beta asset, and the highest beta assets are altcoins, right? Because they move very violently. They don't have a big market cap. They don't have that much liquidity. They don't have that many players behind the assets. So you would say that altcoins are much higher risk than Bitcoin. So why is that important? Well, it's important because when altcoins show significant weakness and they start getting sold off heavily, that is an indication that the overall money flows, the overall market is starting to look weak. And I think Bitcoin is probably just playing catch up. Okay, so I don't think that as you see Link breaking down, as you see things like Ethereum breaking down, Litecoin, Bcash, Polkadot, all these different projects that are breaking down, I think Bitcoin is probably going to follow shortly after. Okay, and it may not be the massive breakdown. We may not have to go to 7,000 or 5,000 or anything like that, because as you can see, I think Ethereum is down. What is Ethereum down from the highs? Is down almost 30%. I think Bitcoin is only down 20%, right? Link, on the other hand, is down over 50%, if I'm not mistaken. Currently down 57%. So many other projects in the altcoin space are actually down much more. So how do we play this, right? The question is, why is that important and how do we play this? Personally, I think the thing that will bottom the altcoins is first, Bitcoin will start catching up and start dropping down with altcoins, okay? And like I stated, you can watch these levels below. Once Bitcoin starts finding a floor, finding support, I think altcoins will probably find support maybe a few days before it, especially altcoins like Link and Ethereum and DOT and, Litecoin, Tezos, all these different altcoins, right? So I think that will be the key indicator that we would want to watch as a potential bottom being created in the altcoin space before Bitcoin bottoms out. All right. So that's one thing that you could do. Now, if we're looking at simple levels of Link breaking down, I think Link will break down regardless of whatever Bitcoin does, unless Bitcoin starts breaking above, 11.5, 11.7, way the heck up here. I think altcoins are probably going to be bleeding, because here's the thing, right? Something like Link ran up from the March lows to the July or August highs, almost 1,200%. It's pretty much a parabolic run up, right? You can't expect it to go up forever. So that means it has to come back and retrace. Well, where are the retracement levels? Well, I personally think that here are the retracement levels on the way down. We've already broken through the 382.50 and the 618 level, right? Generally, if we're breaking through all those, I personally think that we're probably headed to about 75% to almost 80% on the way down. And to the more extreme level, it might be all the way down to the 886, which is a key fib level, which I utilize in the Forex markets. Not really that largely used in crypto, but I think you would find a lot of success if you actually turn this level on. So make sure you guys, turn on the 886 level. All you can do is go into your Fibonacci settings. You could turn on the 70% right there. You could turn on the 886 like I have right there. And then you get to see fib levels on the way down. So the levels, what I see personally that should hold up things like Link is at least this marker right here, which is 70.5 fib. That's around $7 or so. This is where we held that support before we made, a big move parabolic up, right? So at the very least, I think Link will probably come back to $7 and some change. If we break that, then I'm probably thinking we're going to hit this, $4.75, $5 level. And I actually like to utilize another trick, if you will, which is the monthly candles. Okay, so again, this is another trick that you can often find in the FX markets and the equities markets is when you start looking at things from the monthly candle perspective. All right, here's how you can map out things. Okay, you look at the last big bullish parabolic looking candle on a monthly basis, and if it's not one, it's the last two or the last three. In this case, I think it's at least this candle right here, which was a massive candle, and maybe this candle as well, which is another pretty big bullish candle, right? So at the very least, I think Link is probably going to take out this low right here. So let's map that out actually. Okay, let me delete this and let's put on a marker on it. All right, so I think at the very least, Link comes back to 693, which is, again, $7, what I stated before. Why is that important? Because if you print this kind of red bearish candle, or even, say the month of October, way the heck down here, and you pierce the low of this area right here, you have basically eliminated everyone who bought in all of September, all of August, right? So as soon as you start piercing below this low, I think you've basically, broken through a lot of buyers over the last 1 to 2 months. And I think that is the first level of capitulation, if you will. The next bigger level, let's just say Link doesn't stop there. Well, the next bigger level of capitulation is right around this area right here, which is around 450. And like I said, $5 was generally my next big level, right? And you can see, and this is a pretty big resistance level for Link on the way up before it broke out. So it makes sense that, let's just say if $7 doesn't hold up, well, then we should be heading down here. But personally, I personally think that we're probably going to do something like this, pierce through all the way down to maybe 650 or something, pop up, on the way back up towards like $12 or $13. And if we're supposed to head up higher, we'll head up higher. But if we're supposed to roll over, I'm fairly confident that we're probably going back to $5. Okay, this all depends on the macro picture of what happens with Bitcoin, what happens with the S&P 500 right here, because Bitcoin as of late, unless you've been living under a rock, it's been heavily correlated with the S&P 500, and Bitcoin has been heavily inversely correlated with something like the DXY, which is a basket of currencies. Okay. It's a basket of currencies against the US dollar. And the US dollar, which is the DXY ticker right here that you can see, what it's effectively doing is it broke out of this descending broadening wedge. Not only that, it broke out of its key trend line that we held May, June, July, and even over here in September, and it broke out pretty strongly. So usually the correlation is very simple, like I've stated before. DXY going up equals S&P 500 going down equals Bitcoin going down. DXY going down is vice versa. Everything else will probably go up. Okay, so I think at present moment, what's happening even in the political landscape is quite important, because what we have is Jerome Powell meeting. Right? I think there's some meeting about his. Let's see here. I know there's a meeting today or maybe tomorrow that's happening, and there's a discussion about potential stimulus being passed. And I want to say that is, see here, stimulus bill passed House. Let's check that out, right? So as you can see, why is this important? Well, stimulus bills like this are basically the drug that the market needs, which is free money. Okay, the market wants to see that the Fed is going to um, disallow the market from sliding. They're just trying to figure out at what point the Fed will step in and stop the market from bleeding much further. Well, you could see the market fell maybe 6, 7%, which is the S&P 500 index. Other stocks fell, 10, 15, 20%. And, the Fed and the House kind of stepped in and they said, hey, wait a second. We're seeing, the stock market fall. We're seeing people overwhelmingly, consistently losing jobs. So they have to kind of put a stop to this, dumpster fire, if you will. And so these kinds of talks, in my opinion, are positive or relatively bullish for the market. Now, the real question is Wall Street looking at this as, okay, well, from here we can go to higher highs, or are they kind of looking to form maybe a range in this area and start distributing their assets? In which case, then this is very bearish, and we're probably headed down much further. I don't know which way it's going to go. It's too early to determine, okay? But at present moment, I could tell you, near term, this is probably going to have some form of positive impact on the market. Maybe we climb back up towards this level, which is 3,400 points, which again would imply that Bitcoin goes up, maybe another $500 to $1,000. I don't know. But so far, the markets are relatively unmoved. If we're looking at this from a smaller time frame perspective, the markets haven't really done a whole lot. We call this the slope of hope. Okay, why is it the slope of hope? Because after you have such a big run up in the market, right? After you have a big run up, everyone thinks that the market can't go down, or if it goes down, it's going to get bought back up, and we're going to go to higher highs, right? It's the biggest fallacy that the market kind of traps people into thinking, because it's really just an emotion-based movement, right? So the market puts in a nice top, sells off quite violently, and then it chops in a range. And this is where people think that, all right, well, this is a buy the dip opportunity. I think, we're going to go up from here. And then the market actually goes down. But then people don't really sell, because the next few days, the market grinds back up again. And again, people think, all right, well, I'm going to buy the dip again because I think the market is going to go back up. Well, this is what we call the slope of hope, because what it's effectively doing is you have a big drawdown. You're already down 10, 15% in many stocks. Okay, you're chopping around sideways, you draw down some more, and now you're starting to potentially start rolling back over again. And before you know it, you'll keep bleeding and bleeding and bleeding, maybe into October, maybe into the end of October, I don't know. And that is called the slope of hope, because at every point you think that the market is going to come back up, but then it rolls over again, chops again, pops up again, rolls over again. And I've seen this over and over quite a bit. And I can tell you that at present moment, psychology-wise, this is definitely the slope of hope, because no one wants to think that the market can go down. No one wants to short the market. No one wants to sell. And I think this is the perfect trap, in my opinion, that's laid out from the psychological perspective. And I think it's the same thing in Bitcoin. And this is why I am short. My average short is like 10.7 or something, or maybe 10.6. And right now I'm in profit, but I'm not going to let go of my position until I see a few things happening. Number one, all right, there's a few different ways you can look at this from, say, a scalp or a swing perspective. Okay, number one, if Bitcoin gets above this 10,584 marker, it's probably getting to 10,815. If it gets above that, it's probably getting towards this trend line, and then this order block, which is around 11.3, 11.4. Okay, at present moment, I know that doesn't help you, because I'm saying that if it gets to this area, it'll get up here. If it gets up above this area, it gets up here, right? Well, this is how the market is being created. It's structured right now as a level-to-level play. There is no clean breakouts, clean breakdowns. That's it. It's as simple as that. So if you want to scalp, it's very simple. You scalp from this low to this high. If you want to short, you scout from this high to this low. If you want to scout from this high to this high, that's another opportunity. Or if you want to scout from, this 1080 or 10,800 towards this key trend line, that's another way. Okay. But there are no big swing opportunities available here. The swing opportunities, I think, are seen from a daily perspective, which is, again, high, a lower high, and a lower high. And so this is why the title of today's video was, why you can potentially short the bounces. Well, I think most people are unwilling to look at the market from the bearish perspective. And this is, again, going back to the slope of hope, right? I think the slope of hope has already been created from this key high, this lower high, and then this other lower high, okay? So even if we're looking at, multiple trend lines, say even something like this, right? And even this trend line right here, I think you can clearly see that the market is putting in lower highs. And unless one or two of these trend lines get broken, I don't see upside visible anytime soon. In fact, I see more downside first, and then maybe, movement back up just to trap people up top again. But if we look at things from the daily perspective, this is where things get interesting, right? We had a rejection off this key marker, which is, let's just say 12,000, right? After we saw that rejection, like I stated, it's very clear that this now can be looked back on as distribution, right? Unfortunately, it's very hard to look at distribution right in the middle of it. But we can say now that this was clearly a head and shoulders top. We broke down, we retested the bottom of this key neckline right here as resistance, and now we're breaking down again, okay? I think that is clear as day, and it's very hard to argue anything that's bullish about this. The bullish arguments from people right now is that, oh, we had a big drop down, we chopped around sideways, we made our way back up, and now we're just retesting this previous range as support, and then we're going to bounce up from here. No, you can't do that, because if you're looking at that range, you should also look at this range that I defined, which is much bigger. This is a month-long range. We came back into it for barely half a day, and then we got sold off aggressively. So why not look at that as more bearish and say this is a proper retest of a bearish pattern, of a bearish distribution, and we should start heading at least towards these lows and possibly even lower. Well, most people would want to do that because that goes against their bullish bias, right? Just remember that, right now, I mean, technically, even myself, right? We all have some form of bias. I try to do as good of a job to not hold that bias to the point where, it's detrimental to my trading, or it's detrimental to the objectiveness the market is showing me, or rather the objectivity. But I think I've made the case why the market is showing you more bearish signs and potential more drawdowns, whether it's from the perspective of the traditional markets, whether it's the perspective of moving averages or my other indicator that I told you all about, or whether it's from the perspective of the head and shoulders, the proper retest of, price going back into distribution and getting rejected. So you have, I'm laying out the signs and the possibilities for you guys that, hey, here are the bullish cases, here are the bearish cases, right? And I think right now, if we had, say a checkbox, we would check off more boxes in the bearish side than we would in the bullish side. Okay. Does that make sense so far, by the way? I feel like I'm rambling, so let me see if there's any questions in the live chat right now. Okay. Let me see here. I'd like to hear your thoughts about the 47% of options expiring on Friday. That is a solid point, and I'm going to go over that. So I have an options calculator right here, and I showed this to my community before. All right, make sure y'all check this out. It's dataseek.github.io/options scanner. This will help you see, first of all, how much open interest, how much volume is in particular options. So let's do this, right? So let's check out, I don't know. Actually, this one doesn't really help me. Let's go to Deribit. Maybe Deribit will help us. Okay. So we have today's the 23rd. We have a bunch of options expiring the 24th. So let's check those out, right? Okay. So where is the most concentrated volume, the most concentrated interest? All right. So let's see. Here you have volume over here, pretty decent. It's actually not that high. It's actually not that high. Most of the volume is concentrated around this area, like 10,250, 10,375, which makes sense because these are at the money options. At the money is basically, when the price is literally right near where it's trading. Um, so I would probably say that, let me see here. So lots of call volume right here for 10,500, as you can see, for 24th strike, which again, like I said, it makes sense because we're literally at 10,476. So I don't think that the Friday options are going to mean anything. Most of the expiry probably happened the last few days because people are probably closing out their contracts. People are probably looking at the theta, which is the time decay, and wanting to close out their positions. So the market doesn't bleed into their premium, their value. Let's check out the 25th, right? Again, most of the volume, oh, this is kind of interesting. Yeah, most of the volume is concentrated right here in the calls, which is 11,000 has a decent amount of calls, 140 of volume for the 10,750. Not a whole lot of puts, maybe around 8,000 for the weekend, which is the 25th. So that's kind of interesting too, right? So we have a pretty wide spread. Okay, we have out of the money options for 8,000, which has 223 contracts of volume, and then we have 265 contracts of volume for 11,000. So you can see there's a pretty wide disparity. I would not be surprised if price gets pinned right in the middle, which is basically where we are, which is 10,000, 10,300, 10,500. Because here's the thing, right? Just because the options volume is high on the extremes of 8,000, as you can see right there, and then 11,000 that you could see right there, it just means that there might be people hedging on one side or the other for whatever positions that they have in their market. That's effectively how you can hedge options, is just in case you're too long. Okay, you can hedge for more out of the money options, like buying a put for 8,000, meaning you're effectively betting on the price to potentially go down, and in which case it does. Well, you might lose some money on your long, but you'd make back that money by having your put for 8,000 appreciate a lot. Okay, so that's kind of how you hedge. And same thing on the short side. Let's just say you're short right now, right? And maybe you're underwater. And let's just say the market goes up heavily towards 11,000 over the weekend or towards the weekend, and you bought some call options for 11,000. Well, your call options would appreciate very nicely. And even though you're short, you wouldn't lose as much money because again, your call options are effectively giving you back, some of that hedge. Does that make sense? Okay. The other question is BTC following gold down? Okay, so let's check that out, right? XAU. So I've talked about, again, gold, silver, commodities. I think Bitcoin trades much like commodities than it does equities because of its sort of violent nature, if you will. And so, gold starting to break down, in my opinion, is just, again, another sign that we can add to our checklist of, wait a second, the DXY is moving up, gold is moving down, equities are slightly grinding down. BTC also had its big, 1 month long distribution, whatever you want to call it, retest right there. This is, in my opinion, a swing shorting opportunity. I am swing short. Okay, I don't see how you could play this any other way. Any person who's saying that this is a great opportunity to long, I would like to see them build a case for why they should be long. I really would, because I don't see one. Right? If you're long, you're only scalp long. You're only aiming towards 10.5, maybe 10.8. That's it. Those are your only targets for near term. But if you're short right now at the very least, your first target is 9,800 to 10,000. That's at least a $400 to $600 drop. And then below that, if that breaks, right, these are the bigger targets, 9,450, 9,100, and $8,800. That's at least 1,000, 1,300, and $1,400 to $1,500, right? So you can see the risk reward, in my opinion, is better for the short side than it is the long side. Not only that, I think the structure itself is better set up for a short. So I think that every movement that you get on the way up, as long as you don't start breaking above 11.3, 11.5, I think it's a shorting opportunity. If you get an opportunity to short again at 10.5, 10.6, shit, I would short. I'm already short, by the way, but I'm just saying that that's what I would do. Again, not investment advice, guys. Please do your own research. But we have a Discord community. The link is below right there in our YouTube description. So do go check that out. We put out a lot of free content. We definitely appreciate if you hit the thumbs up right now, because I do these videos quite a bit, right? If you look back on my channel, on the YouTube channel, gosh, I feel like I've made thousands of videos over the last couple of years, and a lot of them are free. But also on the advantage side, we have a lot of information that we don't like to sort of give out for free, because we take a lot of time and a lot of effort to deliver excellence and deliver a lot of content for our advantage members, some of which is visible right here, right? We actually closed one of our Rune positions well before the market dropped, as you can see right there. Rune, we bought somewhere around 5,100 or 4,800 sats, and we sold somewhere around 8,800 satoshis when we made this big pop up. Okay, so we made about a good 60% profit on that, and I can show you Rune as a position right now. All right, exactly where it is. So look, we sold way the heck up here around 8,700. Look where Rune is now. It's down another 59, 60%. See, this is the kind of information that you'll get in the advantage side of the community, is potential exit opportunities like this. Now, I'll, for the sake of being honest, I'll also show you guys my loss, okay? My average entry for Link was 1265. I closed it at 1121. And I have good reason to close that, okay? And I'm gonna show you guys that again. All right, so here's where we were, somewhere around, I think, 1265. And by the way, we kind of averaged from here on the way up and then on the way down right here. So it's not like we literally bought right here. It's that we already had a position going from here, and then we bought some more on this bleed down. So our average was 1265, right? So where is 1265? Somewhere right around this marker right here. So where do we sell? We sold right around 1120 or 1130. So let's just say right there, right? 10, 11% drop. So we sold right around this area when Link was starting to drop. Why do we sell around that area? Well, I think it was pretty obvious to me, at least, that we kept hitting this area as resistance, 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 started to roll over, no signs of, price moving back up. We said, all right, it's time to get out right here, because price is really just basing out, okay? And again, I want to show you guys this from the loss perspective, is that from where we sold out, which is 1120 or 1130, again, Link is down another 27%. So we avoided another extra 27% of a loss by selling out of our position at a slight loss, which is negative 11%. The other position that we closed out of was DOT. Okay, DOT was a massive trade for us. We got in somewhere around 290. And let me see here. All right, so here's where DOT is, okay? See. So we got in around 290-ish, 295. Again, this is before the pre-denomination, just FYI. And we sold, somewhere around this area where we started to roll back over. So around, 70 to 80% profit, okay? Again, if we would have left that position, right? So our average was 295, 297. We would have only been up 39, 40%. Right? So we basically would have lost out on the extra 30% or so that we pulled out of the market. So the point is that if you start seeing weakness in the market, don't just assume that the strength is going to spontaneously come back. okay? Find out the reasons why the market is selling. Find out multiple confluences, whether it's moving averages, pivots, altcoins selling off, gold breaking down, the DXY going up. Find all these reasons to sort of look at the market and say, okay, is there good enough reason why the market is breaking down? If there are more reasons stacking up why the market is breaking down or why it should keep breaking down, then it's time to start letting go and it's time to start probably shorting. And that's exactly what we've been doing. Now, the other part of the final discussion that I want to talk about is what is the next big wave that's going to come out of crypto, right? Because there's always some wave. 2017, it was the ICO bubble. 2018, again, it was things like XRP or, what was it called? Tokenized assets and something like that. Maybe it was like gaming or something. And then, now in 2020, the last several months, we had DeFi, right? That was like the big thing. DeFi, farming, year in finance, all this stuff was popping up. I personally think that the next big thing is NFTs. Okay? I think NFTs are probably going to be, going parabolic, kind of like DeFi did. Okay, the way Link moved up, I think we're going to have a ton of NFT tokens that are going to make massive strides in the market. That's really how the crypto market is. Okay, it really moves on hype. It moves on sentiment change, and it moves on greed. And I think a lot of the money and a lot of the greed will, in my opinion, be in the NFT space. Now, if you go on CoinGecko, there's a category that you could look at, which is the NFT tokens. And in the NFT tokens, there's all these tokens that you could look at, right? This kind of helps you iron down, okay, what should I be paying attention to? What are the coins under the NFT category? Well, there's, Wax, which is one of them, Decentraland, Mana, which is the ticker, Theta, this meme coin, which literally, went up 200% over the last seven days. Abyss, which is another one I'm paying attention to, right? So Shroom, again, this thing went parabolic, 624% over the last 7 days. So I personally think that NFTs are going to be the area of the market that are going to probably take off over the next several weeks, several months. Again, that depends on where Bitcoin bottoms out, where the stock market, where the crypto market overall starts finding support. And personally, I think that might be in this area right here, okay? Because I don't really know if the market is ready to just start breaking down and going towards 6,000 or 5,000. Again, I could be wrong. I just don't see it. I think what the market might be doing is maybe like I don't know, maybe we could count this as a big wave 1, wave 2, wave 3, wave 4, wave 5. And then I think we're going to have maybe another big push back up towards 11,500, 12,000. I think in this movement back up, it might be October, maybe November, December. I think in that movement back up, that's when you might start seeing NFTs take off. Okay. And I'm going to be writing up a small report for my Advantage members, which tokens exactly I will be getting into over the next several weeks, which I've put on my watch list. And it's going to be only for my Advantage members. So make sure y'all come join. This is our website right here, guys, thealphatrades.com. Go to the products page right here and buy our Advantage membership, okay? And you will get access to all these locked channels that you see, every single one of these, where you can get analysis done by myself, done by all our other traders in our community of what tokens, what assets we're looking to get into. So there's a question in the chat by our buddy T-Bone. What exactly is Uni going to do, right? Okay, so here's Uni, all right? So again, this is another thing that I mentioned to my community members is watch for this area right here, 450, to be the level to find support. Now, obviously, Uni actually broke down right through that key support, but now it's looking like it wants to reclaim this area, okay? Reclaim this key SR level, which is 450, as support. If we come out of this area and we hold this as support, chances are we're probably going to the $6 marker, Okay, so that's a trade from here, where are we at right now, from here all the way up. That's a 35, 36% trade. So make sure you keep an eye on that. All right. I personally think that if Uni can hold up above 450, very high chance that it gets towards the $6, 13-cent marker. It's definitely, broken below this key trend line, as y'all can see, right? Or I'm sorry, broken out of the trend line, and then of course broken above a key SR level, which is 450. So I think chances are pretty good that it moves up towards $6 and some change if it can hold up above this area. Alternatively, I think I have seen this more times than not. We have a movement breakout, we roll back over, bleed a little bit more, and then we start making our way out. Okay, so also keep an eye on something like that, because the way this 4-hour candle is shaping up kind of looks like an evening star, kind of looks like a bad looking doji. So don't get trapped into buying now. Look for this area to be held as support. Look for the reversal or the confirmation candle up, and then you can start looking at price up here. What do I think about CRV? All right, let's check out CRV, because a lot of our community has been quite bullish on CRV. Personally, I don't know that much about it, other than the fact that again, this is one of those yield farming, DeFi quasi tokens that I think again might pick up steam in the next cycle when altcoins bottom. Okay, I really think it's a bit early to start getting to altcoins. Okay, I really do think that. I think personally, as Bitcoin rolls over, let's just say towards my 10K target or 9,000, 450 or all these targets below, if that happens, well, then there's a chance that altcoins will break lower. In which case, then you can start getting into those positions, right? Whether it's CRV or DOT or Link or anything really, right? But I am not convinced that this is the area that Bitcoin is going to stop when we push back up. I'm just not. I need to see a lot more strength come into this area. And if there's going to be strength in this area right here, that means there's going to be strength in gold. That means there's going to be strength in the stock market. And that just doesn't seem to be the case right now. It just seems like I said earlier, this is a slope of hope. Keep trapping people, keep bleeding on the way down. And who knows, maybe October might be the month where we bounce back. Because here's the thing, historically, right, September, we've had, 10 or 11 years of history of Bitcoin. September has been 1, 2, 3, 4, 5, 6, 7 months of red and 4 months of, green, right? And most of September has typically been pretty bearish for the last 10 years of Bitcoin's history. October, on the other hand, has 1, 2, 3, 4, 5, 6, 7 months of green versus 4 months of red. So I think if we have a pretty big red month in September, then we should be looking for a relatively positive month for October. Relatively. So keep an eye on that, okay? Because this is on my Twitter feed, guys. Make sure y'all follow me if you don't already. Alpha Trades, the Alpha Trades right there. So I found this heat map done by someone. So yeah, that's what I'm thinking. I think September is probably going to be bloody for the rest of the month. Let me see, right? Let's see how the weekly looks. The weekly looks like crap again. From the weekly perspective, I've mapped this out before. We had this key area as resistance, broke up, tested as support, tried to break up again, but again, we're rolling back over, right? So usually when you sort of break out of resistance, you don't want to come back inside in the previous area right there. You want to just kind of tap it as support and then go. Okay, you don't want to be spending all this time right below the area that you just spent so much time breaking out of. All right. So again, on a weekly perspective, I think this also looks bearish, and I'm still looking for more downside. On the final, monthly perspective, again, based on the chart that I just showed you, the heat map, right? This is how things look. Okay. Here is a marker that I had. This is kind of arbitrary, but I left it out several months ago just to keep an eye on it. And I thought that this was really interesting because, as you can see on a monthly basis, okay, we have not had a single candle be able to close and hold above this level, which is $11,500. Right here, even in the parabolic movement in December, big spike up, but again, next candle got sent down. Again, following candle in February 2018, rejected right there pretty much by that wick. Again, March, same thing, rejected right there at that wick. Same thing right here, not a single candle was able to close above this 11.4, 11.5 level. Again, same thing, right? We closed August slightly above it, but again, September, it looks like we're about to close pretty well below it. All right. Again, we have 7 days left in September, so anything can happen, but chances look pretty high that we're going to close below this 11.5 marker. So I think, this is maybe the marker that you want to pay attention to, this 11.5 area. And the fact that we're getting rejected right here, the fact that this doji printed in August, the fact that this is a confirmed breakdown candle in September, I don't see why there's any reason why we can't, head towards these lows right here, which, again, is what I stated earlier, which I've seen in the FX and equities world is typically when you start seeing reversals like this, you start taking out the lows from the last big bullish candle. And that's right around the low of this candle is $8,800 or so, or let's just say 8,900, right? So that's what I'm thinking, guys. I personally think September and maybe even early October, we head towards that 9,000, 8,900 area, and we probably tap that, and then we'll see what happens. Okay. So again, let me see here. Are there, let's see, there's a question. I spoke about CRV a little bit. Yeah, like I said, I don't really know a whole lot about it, but personally, I wouldn't touch it right now. I think you should wait for the altcoin and even the Bitcoin market to start selling off some more, start bottoming out, whether it's the end of September or beginning of October. And, if you like CRV, Curve Dow token, then you can get in, but I just don't really see a reason to get in right now. Do you have your website just for beginners? Yeah, man. If you go to the products page right here, we have a technical analysis course, guys. If you buy this course, and it's only $20, by the way, and you shoot me a message, this is me right here. If you message me, I will give you 7 free days in our Advantage membership. Again, that's all these lock channels that you see. The free side of our community is just these channels right here. Okay, you don't get to see all these locked channels that you see on that you would get on the paid side. So if you do want to buy the technical analysis course, buy it, show me proof, send me proof right here, and I will give you 7 days free access for our Advantage community, which is all these locked channels. All right, guys, I think I've taken up enough of your time, enough of my time. Thank you so much again. Hit the thumbs up if you enjoy our content. Leave me a comment of all the things that you've appreciated about our community or things that you want covered over the next several days. And yeah, that's pretty much it, guys. Y'all take care. If you have any more questions, join the free side. The Discord link is below. The YouTube description right there. And cheers. I'll talk to y'all soon.